All right, welcome everyone. We'll go ahead and put up the chat so you can drop a comment there in the chat as you pop in. Happy Friday. Hope everyone's having a great day, ready for a great weekend. And we'll get started here in just a few minutes. Good morning, everybody there in the chat. Got a great topic today. Definitely something that people are confused about sometimes or people need some clarity on. So we're going to talk about that today here. But like we always do, we'll wait a few minutes here just to go live on all the different platforms and give everybody a chance to jump on here. Again, good morning to everybody in the chat. Happy Friday. All right, looks like we got a bunch of people jumping on. All right, so we can go ahead and get it started here today. We'll take the chat off the screen and we will go ahead and get into it. So, welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We do this show every weekday so we can see the rates live, called Daily Mortgage Rates Live. We actually check out mortgage rates for the day for different programs, and then we do a deep dive into a topic every day. And today's topic is manufactured home loans. Now, a lot of people have misconceptions about this or a little confused about what a manufactured home is or isn't. So we're going to go through that today and pull up some real live examples of some quotes. So before we do that, just like we do every morning, Nick, let's go ahead and pull up our pricing tool and go through the rates for today.
All right, thank you, sir. Let me go ahead and switch my screens and we will get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. We have over 300 licensed loan officers, and we are able to do primary second homes in 22 states, and we can do our DSCR business purpose loans, which we'll talk a little bit about in a minute, in 44 different states, so pretty much every state. Now, if you'd like a full loan estimate, please get with one of our team members. This tool will show us the general rates for today and the general APRs for today, but you can get a full loan estimate with a full breakdown in just a few minutes. Today is April 21st, just after 11 a.m. Eastern, so the general terms of our general programs are up. So let's check out our rates this morning. We will set our pricer to a loan amount of $400,000 for all of our demos today. We will set our LTV to 80% loan to value, 20% down payment, pretty common scenario. We will set the desired price to 99. That means we're going to tell the computer to find the best rate at one discount point in cost. And we're going to compare our different loan types. We'll start with conforming conventional as we do every day. We will go into FHA, which is usually the next option. And then we will check out our non-QM, aka expanded guidelines, where we have over 5,000 additional loan programs using alternative income. We can quote VA, but that is only for our eligible vets, so we don't do that live. But if you are an eligible veteran, we appreciate your service and would be happy to quote that in just a few minutes. And same with USDA, that's only for properties in a USDA eligible area, which is a rural area. So if you do happen to be shopping there, let us know. We'll be happy to quote that up. Let's start today, though, with our conforming conventional. We'll set everything up as a purchase, 30-year fixed loan, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade, and we will use an estimated 760 FICO for all the demos and an estimated debt to income ratio of 40% for these demos. Now, let's check out our rates this morning. It looks almost identical to yesterday, I believe, so not much movement. Sometimes good news, right? So 6.5 rate, 1 discount point in cost, and a final APR of 6.676. Now, remember to key in on the APR. That's how we compare across programs. So it'll allow us to compare our conventional to FHA and then into our non-QM programs. So this is a great option for our borrowers that qualify conventional. And again, it's about the same as before. So as we watch it move, we're about the same rates as yesterday. Now, if for any reason our customer doesn't qualify for conventional or maybe wants to check out other options, FHA is usually the next option that we go to. So we will set up the same scenario using FHA. FHA does allow a little more leniency on credit and a much higher DTI, so a little bit easier to qualify in some cases. So let's check out our rates for FHA program with exactly the same settings. So as always, FHA is a little bit lower rate here, 5.75 rate for 1 discount point and cost, and a final APR of 6.352. Remember, FHA has a yearly and upfront mortgage insurance, so that's why you always got to key in on the APR here. APR is just slightly below conventional, though, in this case. So many times in the past, FHA is typically higher. In this case, and recently with some changes, FHA is actually a little bit lower in this scenario. So definitely recommend all of our borrowers out there, even if you're not looking at FHA right away, could be a great option. In this case, it's actually just a touch cheaper, 6.352 APR. And remember, conventional was 6.6 something, just a little bit higher. Now, if for any reason our customer doesn't qualify for either FHA or conventional, many other banks or lenders don't have other options. Fortunately, at the Mortgage Calculator, that's what we specialize in. Non-QM, aka expanded guidelines, where we have over 5,000 other loan programs we can use if we run into trouble. So everything else will stay the same here, but we do get one new option with non-QM. That's our income verification option. Now, full doc, that's what we use for conventional FHA. That would be 2 years of tax returns. Kind of defeats the purpose selecting that. Typically, we select a non-QM in order to use alternative income, such as 1 year alt doc, 2 year alt doc, asset related, where we don't even need any employment. We just use assets. Business bank statements are very popular. DSCR we'll talk about in a minute. Personal bank statements, very popular. We also have VOE, 1099, P&L, all that stuff. But the most popular program by far is our 12-month personal bank statement program. And that's going to be for our self-employed borrowers. Many times our self-employed borrowers, when they use 2 years of tax returns, have various write-offs. So we're able to eliminate that by using their latest 12 months of bank statements to determine a debt-to-income ratio of 40, in this example, using 12 months of bank statements and their actual cash position rather than their tax returns with various write-offs and such. So in this case, we will check out our rates for a 12-month bank statement loan for our self-employed borrowers. Now remember, this will be a higher rate, but this is a solution, right? So our borrower wouldn't qualify otherwise. So great option here, 7.25 rate for 0.875 discount points and costs, and a final APR of 7.326. So remember, the conventional rates was around 6.6 something. So just a little bit higher than conventional. We're here with some great options for our bank statement borrower who would otherwise not be able to get this home. So a little bit higher rates, very comparable. Definitely recommend our borrowers out there need a little bit more income, check out some of these options. Now, if we scroll down here, there's a ton of different versions of these bank statement programs. As you can see, dozens and dozens of them. Our team can navigate which one of these may allow such things as a recent bankruptcy or foreclosure, things like that may have higher rates, but allow more flexibility. So tons of different options here. Now we'll switch gears a little bit. Let's go back to our quick pricer and do our final two scenarios, which will be for investment properties. We always want to check out the investment property rates every morning as well. So we'll set up the same loan amount. We'll set up the same LTV, 80% loan to value, 20% down payment for an investment property. Tell the computer to find the best rate at one discount point again. And we're simply going to compare our conforming conventional options with our expanded guidelines. Remember, FHA, VA, USDA are not applicable for investment properties. So first we'll check out our conventional rates for our borrowers that may go full doc and want to qualify for an investment property with full doc. Everything else will stay the same as our other scenarios. We'll just switch it to investment, and let's check out the rates this morning. So investment rates are always going to be higher, and the GSEs that operate the conventional loan programs have added basically penalties, loan level price adjustments for investment properties. So that's why the computer is unable to find an option with one discount point. The lowest APR option the computer found today, 6.875 rate for 3 discount points and costs, and a final APR of 7.118. So many times our investors don't mind going higher in rate if they can lower their discount points. But unfortunately, there's just not many options here, even if we go up higher in rate. 7.49, 2.5 discount points in cost. A great option for our borrowers that may qualify conventional. But I definitely recommend that we check out our non-QM for all of our investment property purchases or refis, whichever version we're looking at. So some great options here for full doc for conventional for those that need it. But let's go back to our final demo, set it back to investment, 80% loan to value, and we'll do our final demo here with expanded guidelines, non-QM. And we get two new options we must fill. First off, our income verification option. So let me scroll down a little bit. The most popular program by far for an investment property is going to be our investor DSCR program, and that's because it actually doesn't require any income from the borrower or any employment from the borrower. We're simply going to use the estimated rental income from the property to determine a DSCR ratio. So if the estimated rental income covers the PITIA, the mortgage expense of this proposed loan here, the ratio is 1.00 or higher. That means the property generates more revenue than the expenses on a monthly basis. If the ratio is under 1, that means the property doesn't quite cash flow. We even have options for DSCR ratios under 1. I'm going to go ahead and leave this blank for the demo to try to get the most options, though. And we always need to set a prepayment penalty here. That is standard for a non-QM investment property. We always choose 3 years as the most standard option. However, we can choose 0 if we wish. That will limit the loan programs and cost more. And we can choose 5 years. That will also have a limited amount of loan programs, but cost a little bit less. So for our demo, though, we always want to do 3 years since that's pretty standard. Now let's check out our DSCR options this morning. Oops, it does want us to put a DSCR. I was going to try to not put it there, but let's go ahead and check it out. Oh. Let me try one more time. I think it screwed up on the DSCR. See if I can get it to kick in. Come on. Oh, no. Not getting action. So I guess Jose will have to explain that on his own here. So let me go ahead and get into our topic for today and switch my screens. So as Kyle introduced for today, our topic is going to be manufactured homes, which I was going to show you a DSCR example there, but Jose will break down a detailed DSCR example for an investment property. But there's also a couple different versions of manufactured homes. But first off, I know Jose wants to speak on what is a manufactured home, because that's the biggest misconception that we always deal with. So I'll let you go ahead and take over, Jose, and drop some knowledge.
Sure. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Yes, manufactured home is one of those property types that is a little confusing because of the nomenclature. I mean, MH means manufactured home, but a lot of times people think MH means mobile home. And then the confusion then starts at the very beginning of the structure of the deal when we're getting requested for information on a mobile home, which is not possible to finance under regular real estate transactions because a mobile home does not have any real estate attached to it. A mobile home is actually a fancy trailer because it is actually titled like a trailer, like a vehicle. So mobile homes have a title that looks just like a car title. However, when a mobile home transitions in its life to becoming permanently affixed to the land, and with the affidavit and everything, and now the land and the structure are one, and it is now considered real estate, real property, it then gets titled like a regular home. It has a folio number, and you can find it in the public record search. It will state property type, manufactured housing, but it is a regular, home for financing purposes. So that's the most important thing to consider, is that a manufactured home has land permanently associated with it. A mobile home does not. So when you are setting up your applications, manufactured houses are real estate owned, mobile homes are not. So I'm going to give you a few examples here on some manufactured home purchases. Just to let you know, cash out refis are not possible on manufactured homes on conventional FHA. You can only do rate and term, second homes, primary, stuff like that. So on our scenario here, we're looking in the first example is a manufactured home purchase with 3.5% down. Right. So here we have 6.75 has actually a lender credit. I'm putting lender credits on here in the rates as well, because, you know, on these low down payment options, a lot of times we want to have the ability to help the borrower out a little bit. So there you go. You got some lender credit there, or they can buy it all the way down to 5.375 at a cost of just under 3 points. So this is 3.5% down FHA. Now, I wanted to point out now we do have a first-time home buyer, 3% down, conventional, right? So you will note here, I looked for some rates with lender credits as well, because again, always important to our low down payment buyers. And here we have 7.625 actually has a lender credit of $4,365, which is almost 1% of our loan amount. And you can buy it all the way down to 5.99%. So if we're comparing the rates, FHA is a little bit better. But what I will tell you is that the mortgage insurance on the first-time home buyer 3% down program was $130, and the mortgage insurance on FHA is $221. Mortgage insurance stays on there for the life of the loan. On FHA, it does not for the conventional, so that may be something to consider. Something also to consider on the manufactured home loans, really important when you are debating FHA or conventional, is on the FHA manufactured home loan, they are always going to require a structural foundation report. That's basically an engineering report. So that is required off the bat on all FHA loans. It's about $500 or $600, and you do need to disclose it on the loan estimate, or else you may have an issue. And you also have decal data plates and HUD data plates and HUD decal plates that also have to be accounted for. And if they are not found by the appraiser, then you need to get letters to verify that. So you should usually disclose the cost of those 2 letters, one for the decal plates and one for the data plate as well. So keep that in mind when dealing with manufactured home loans and the additional expenses and considerations to make, because, you know, that could be an issue for you if it's not going to pass the inspection. On the conventional, they only require that inspection if the appraiser specifically notes a deficiency on the appraisal. So very important point to consider there. So here is our 5% down option, not first time home buyer. So where were we here? 5.99. And over here, we're looking at 6.125. So very similar in rates. However, the MI is going to be a little higher on the non-first-time home buyer option. And now for our last example, is the one that Nick was trying to bring up, right? This is the one. This is when we're pulling the rabbit out of the hat here, because, as you all know, if you've been trying to find DSCR manufactured homes, that's almost like trying to find a unicorn, right? So no restrictions on purchase, no restrictions on refinancing. Obviously, LTV adjustments when you're doing the cash out, but it is possible. It is capped at 70% LTV. So that's not so bad. Their max is 80 on a normal deal. So 70 for manufactured housing when this is like one of the very few options in the whole industry to do a DSCR loan in manufactured housing, is pretty darn good. So for all of those out there, the investors love those manufactured homes because they usually get them for a really good price compared to the amount of rent that they can generate. So keep this in mind.
Surprisingly, no questions. Hopefully, everybody knows what a manufactured home is. Definitely tricky, but the investors definitely like them for the cash flow. So, if you got any investors out there looking for those high cash flow properties, definitely we can supply them with the financing there. So, if there's no questions, you want to wrap it up here, Carl?
Yeah, absolutely. So great presentation there, Jose. If anybody wants to get a quote on an actual manufactured home or any type of quote, you can get with one of our loan officers. We have over 300 loan officers all around the country, as Nick said, licensed in 22 states for primary and secondary homes, but we can do DSCR loans, DSCR business purpose loans in 44 states. We do everything from the conventional FHA, USDA that Nick was talking about earlier, as well as VA, but all the way to these non-QM programs such as DSCR, personal bank statement, business bank statement, to fix and flip ground up construction, and everything in between. So visit us at themortgagecalculator.com. We can pair you up with one of our loan officer consultants that can walk you through the process of finding the best programs for you. Now, we do this show every single weekday at 11 a.m. Eastern Time. So you can tune in, see how the rates are going, and check out a different deep dive into a different topic every day, just like we did with manufactured home loans today. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. Thank you, everyone. And we hope to see you tomorrow at 11 a.m. Eastern. Or excuse me, not tomorrow, on Monday at 11 a.m. Eastern. Everybody have a great weekend.
Thanks, everybody.